Thanks for tuning in for another episode of the SilverTowne Vaultcast. Today I have a special guest for all of you. This is someone that I personally admire, someone that a lot of you have requested to get on the show. With us today is Gerald Celente, the publisher of the TrendsJournal, TrendsJournal.com. Gerald, it's truly an honor. Thanks for coming on the show.
My pleasure. Thank you.
I know you're a busy man, so I'm going to get right to it. I really want to talk about gold and silver, but first, I wanted to get your take on the economy. What is the current state of the economy, the U.S. dollar? Where do you think this is all headed?
Well, at some point, this tapering that they were talking about since May is going to have to happen. They just can't keep pumping the money into the system to keep it going. And this is not only the United States. It's worldwide. The Chinese are doing it. The Europeans are doing it their own ways. This is an experiment of pumping money into a system that we've never seen in modern history. And at some point, as I said, they're going to have to raise interest rates. Right now, the only reason there's any recovery at all in the United States, for example, is the record low interest rates. I bought a building in March of 2013, and I got a 15-year locked in at 2.875%. That's unheard of.
Yeah.
You know, and so you turn on the TV and you look at the commercials. You want to buy a car? Sean, I got a deal for you. No, don't worry about it. No money down, 0% interest rates, you know. Basically, we'll give you back $1,000, even though you didn't put anything in there. I mean, they're doing the same thing with the auto industry, with these non-verifiable loans, as they were doing with the housing industry. So when interest rates go up, you know, the bond market explodes and the economy crashes. And no one knows how to get out of this, just like they in the United States. You know, nobody knows how to fix this so-called debt problem. They can't fix it. So I see the economy severely deteriorating by March of 2014.
Wow. Yeah, I've heard a lot of people making, you know, kind of a similar prediction for the spring. But, I saw a couple of tweets from you. You were talking about maybe pulling money out of the bank. You were on the Roy Green show, I believe, and you made the same statement. I mean, are you still kind of feeling that way with everything that's going on with the whole, you know, the shenanigans in Washington right now?
Oh, absolutely. And that's why. You know, maybe Cyprus was a canary in the mine shaft. You know, maybe they did that as a test to see how the people would react. You know, don't forget, Sean, that you go back to 1933, and what the United States did, of course, is they called a bank holiday. And I love it, holiday. You can't get money, you know. And what they did was they made people turn in their gold. It was, you know, the penalty of law. And they made them sell it back to the federal government at $20.62 an ounce. And after they had it in, or they thought they had most of it in, they repegged the dollar to gold. The dollar was pegged to gold in those days, to $35 an ounce. So essentially what they did was the people lost, about 70% of their purchasing power. But in effect, what they did was they devalued the currency, because that's what was going on throughout the 1930s, that countries were devaluing their currencies so they could export more of their product. And that was the way for the United States to do it. So I don't know if they're going to devalue the currency as a means to pay off this unpayable debt of over $16.7 trillion. And a devaluation may be one way to do it.
Do you see do you foresee like a possible confiscation, like in Cyprus, where they just start taking the money? Or,
well, no, what they'll do is they'll keep printing it, you see, but they'll devalue it and just keep printing it. So giving you more of your cheap money, because the Federal Reserve could always keep printing money, where in Cyprus they couldn't. So they'll just keep pumping the cheap dough into the system.
Well, and then you're going to get massive inflation, right? I mean, wouldn't you expect that?
Of course.
Well, and that kind of leads me into gold then. Well, first of all, what's your take on gold and silver? Do you buy it? Do you think that you should? I mean, more than any time ever, I would think now would be a time where you'd want to own something of real value if they're just going to keep devaluing, the dollar.
Well, I don't give financial advice, but I made it very clear that I bought more gold at 1306. It's down to what, 1280 now.
Right.
But to me, the downside risk of gold is about maybe another $100, $150 an ounce. But the upside, I still see it going well over 2,000 an ounce. And I've been buying gold since 1978. My first buy was at 187.50 an ounce. I also bought it, by the way, I believe it was January 20th, 1980, and the intraday high was 875. I bought it then. The next day, it began to collapse. But I remember the panic back in 1980, and it was a very different world back then. Back in 1980, Kazakhstan, nobody even know what one of those was. They weren't buying gold. Everything was locked behind the Soviet Union, everything east of Berlin. There was no Russia. There was no all these countries. And then you'd think about China. All people knew about China was Mao, and India, they knew about Gandhi. That's American history. That's about as far as it went. The point being, back in 1980, there was no global market for this. It was a whole different world. And so all that's changed now. And it can't be as easily controlled, although, as we saw last Friday, I believe it was about 8:42 a.m. Eastern Time, all of a sudden, somebody had 5,000 sell ordered, 5,000 ounces for sale on the COMEX and at the market. And nobody ever sells that kind of number at the market, but they did. And by dumping in 5,000 contracts, I think it comes out to about $640 million. They're manipulating the market. Somebody's doing it, and why would anybody think that they're not? I mean, they're manipulating the forex. They're manipulating LIBOR. Everybody knows about insider trading, and it's not to the benefit of the Europeans, the Chinese, or the Americans for the price of gold, the governments for the price of gold to go up, because then they won't be able to keep printing out their worthless money. So I believe gold prices are being artificially driven down, just like the LIBOR rate was rigged, proof positive, not making it up, just like we're seeing the Forex was rigged, and just like you see all those fines coming out because the stock markets are also with the insider trading. So that, to me, is why gold prices are down.
Okay, but you definitely see higher prices in the future. I mean, at some point, they're not going to be able to manipulate it forever. I mean,
no.
Yeah, it's got to end.
But I look at these. I'm not a trader. I don't trade gold. I buy it, and this could be another year. It could be another 2 years.
Right.
You don't know. But no one knows. But what is going to bring about an economic recovery? I mean, we're still looking in Greece, you're looking 28% unemployment. That's official number. You look at John Williams' shadow stats in the U.S., what do they have? 22%. You look at, with the people that have full-time, part-time jobs and want full-time or have given up working, it's up to 22%. And you look at Spain, you look at Italy, you look at Portugal, you look at Ireland. I love it. There's a big story in the Financial Times this week about how the big rebound in Ireland. And the people are leaving that place in droves. You think the potato famine was going on. Now they're talking about how lovely conditions are over there. And so you don't see, there's nothing in the cards for an economic recovery. And it's very simple. If the Europeans and the Americans don't buy stuff, the Chinese don't make it, nor the Indonesians, the Vietnamese, or Bangladeshis, etc. And if they're not making stuff, then the natural resource producing countries like Australia and Canada and Brazil and Peru and Bolivia, Chile, they're not exporting stuff. So I don't see demand going up, particularly in the United States for consumer products. And all you have to do is look at the slack in retail sales. And now with Obamacare, you know, one of the reasons for the slack in retail sales is that Obama, as did Romney, both promised that if they were elected, they wouldn't raise taxes. Well, of course, Obama got reelected, and they raised taxes. They raised payroll taxes.
Right.
And it's hurting people on the retail level. And now Obamacare, they're forcing people to go out and buy insurance from private insurance companies. And if you don't buy it, you pay a penalty. Well, that's going to also drain from consumer goods. So I don't see a recovery at all. I think that they're going to, if they keep interest rates low and keep pumping money out into the economy, that's, of course, good for gold. But if they don't and they start raising interest rates, that's very good for gold in the longer term, because they're going to create a collapse that will be much bigger than the panic of '08.
Right. Well, I know you're busy. I've got one more question for you, and then I'll let you move on to your next interview. I'm of the mind that the reason why the dollar's still holding on is because it's the world reserve currency. But then what do you make of, you know, all the things that China's doing right now? Like, well, they're the largest purchaser of gold in the world, according to a lot of reports that I'm reading. They're calling for the world to be de-Americanized. I mean, what is your thoughts on China and what's going on there? Should we be worried about any of this?
Well, look what's going on between China and the UK. You know, China's setting up banking systems now in the city of London. And you're even hearing from the UK that they're looking for, you know, China to be, the yuan to be a global player in their currency. So at some point, the dollar is going to be replaced as the world currency, I believe. But China, you know, China has what, 1.2 billion people and a billion problems. You know what China's greatest fear is? The people. And that's why, if you go back again to this past year, around summertime, China was saying that they weren't going to bail out the marketplace, the domestic marketplace. And boy, right away, the stock markets went in reverse. There was panic on the streets, and now they're dumping more dough into it. So China, and what is China holding on also? What, to $1.3 trillion worth of U.S. crap?
Right. Yeah.
You know, so China doesn't have a lot of room to maneuver, and as they could talk all they want, and they're in better shape than the United States in some ways, but they're wholly dependent upon, I believe, the United States and the European markets. So I do believe there will be a shift in the reserve currency. I do believe that the dollar will be part of it, as will the euro, yuan, and gold. And I think that's coming about in the years to come. When, I don't know. It could be accelerated with the decline of the dollar as the United States moves more toward unfulfilling their debt problems, because there's no way in the world that they're going to be able to. They can do it, actually.
Right.
They can virtually do it overnight, and it's very simple. Close up the several hundred bases they have around the world, save $80 billion by having the National Security Agency, where they're paying out to private contractors, stop spying on us, and stop these wars, and they'll balance the budget easily.
Right. Well, I know you got another interview to get onto. It's been a real pleasure having you on the show. Hopefully I can get you back on sometime in the future. Thank you so much for making time and coming on to speak with us today.
Oh, you're quite welcome, Sean. Thank you.
Thank you. Well, there you have it, ladies and gentlemen. Gerald Celente. That was, it was such a pleasure to speak with him. The unfortunate thing is he only had 15 minutes available for the interview. I'm going to definitely try to get him back on in the future so I can get more questions in. I literally had like 20 questions that I wanted to get to that I wasn't able to. But, you know, I just wanted to mostly wanted to get his take on the economy, where he thought it was headed. It was interesting to hear him say that, he could see things starting to fall apart by March. To get his take on China was really cool. and to get his take on gold. And like he said, he's been buying gold for a long time. I think he said since the 80s. So I mean, he's been buying gold for a long time. Obviously, he's a big believer, but he's kind of like me. He doesn't want to give financial advice, but at the same time, he's willing to say what he does. And so just an awesome guy. And I really had a lot of fun doing that. So hopefully we'll be able to get him back on in the future. Maybe we can get him on for, like 30 minutes next time and get a lot more questions. And I really wanted to talk to him about the debt ceiling as well. Didn't get a chance to get to that. But we got some of his take on gold, some of his take on China and their purchasing of gold. And then some of his take on the current state of the economy, which was really, really interesting. If there's more people that you would like to have me interview, then feel free to shoot those over to me, leave comments or anything like that. And also, I think this is very important information that we need to get out to people. And I know I know there's a certain group of people who just aren't interested in the economy and don't want to hear about it. But, it's important news. People need to know that things are unraveling a little bit. People need to know that the dollar is being devalued, that there's a good possibility that the precious metals markets are being manipulated. People need to know that the world, that we're on a road to not being the world reserve currency, the way things are looking, with, like Gerald said, and like I had mentioned in a previous podcast, about China China actually creating new trades with the UK that don't involve using the U.S. dollar. These are all important things, so make sure you share this with your friends, your family, get it out there so we can kind of spread the knowledge, spread the word a little bit. But anyway, it was a fun time. Like I said, leave some comments on the YouTube channel. There'll still be a Thursday show. I just wanted to kind of, I did this interview and I wanted to launch it right away. There's just too much going on to not do the Thursday show as well. So I don't want to make this a substitute show. I'm going to go ahead and still do the Thursday show. That way we're still covering it, towards the end of the week. So anyway, that is the show for today. Hopefully you liked this special episode. If you did, let me know about it. Go to the YouTube channel, leave some comments, Facebook, go to iTunes and give some feedback, whatever it is that you'd like to do. And you can visit Gerald Celente by just going to TrendsJournal.com. Highly recommend that you do that. I go there often. He does a lot of interviews, and there's usually quite a few videos of him giving his take, and it was really, really cool for him to make some time to come on our show, and so we really, really appreciate that, Gerald. And that's it for today. For the best source of acquiring gold and silver, you can contact SilverTowne at 1-877-477-COIN. That is 1-877-477-2646. Or you can just simply visit SilverTowne at SilverTowne.com. Thanks for listening, guys. And remember to get over there, leave some feedback, leave some comments, and we'll be addressing those comments, questions, and things of that nature on Thursday's show. So we'll see you then.
Sean Osmond is not a licensed financial advisor. There's risk associated with all investments, including gold and silver. You should seek advice from a licensed financial expert before making a purchase.